Paul Schatz, President, Heritage Capital, joins us live from Connecticut. Paul, morning. Always a delight to have you back on ET Now. Paul, what do you make of the geopolitical tensions, Iran versus Israel?
And good morning or evening on my time. It's very difficult when you have, two mortal enemies saber rattling. But I think market-wise, and certainly we're in the political season globally, I don't think anything's going to happen. I wrote about this 2 months ago in my Shockers of the Year. I don't believe then, I don't believe now, that Israel will attack Iran without the U.S.'s backing, and I don't believe the U.S. will back an attack on Iran that's not provoked in an election year. So I think you'll have this constant battle back and forth for the next 7, 8, 9 months, but I don't think thankfully, I don't think there will be any kind of military action. I do think, I think we're using that geopolitical tension as an excuse for crude prices going up. Now, crude prices were in a position to rally long before Iran and Israel began to, wage the war of public opinion. So we always look for an excuse. Now we're calling it the Iran-Israel conflict, but I think they were rallying no matter what.
Paul, what about the U.S. markets? What's the life after 13,000 and what triggers could market participants watch out for to take the Dow higher?
Well, I think as most people will probably agree, 13,000 is just a round number. I don't think it's any more important than 13,200 or 12,977 where we closed on Friday. I just think it creates some pretty good media buzz and it makes for a pretty good headline. Listen, the market's had a dramatic run certainly since early October, but more importantly since November and December. The market's tired. It's due for a pullback. It needs a little cleansing. You can see the last couple of weeks, the Dow has struggled a little bit. The number of stocks making new highs has trailed off. We're seeing the Dow Transport not make new highs when the Dow Industrials are making new highs. We're seeing some of the sectors not participate. I think we're at the stage we're probably halfway through the rally where we're going to spend anywhere from 2 to 6 weeks consolidating. We'll have a 4 to 8% decline, and then I think we hit new all-time highs in the Dow second half of this year.
Paul, why are U.S. technology stocks outperforming? Because it is evident that global money managers are clearly putting their money to work in IT.
It is pretty dramatic. This is, in my 24 years in the business, this is, except for the dot-com bubble, this is about as frosty and bubble-esque as I've ever seen in tech. You've got almost all-time record levels of NASDAQ volume versus the NYSE volume, and it's all derived from Apple. This is truly unprecedented. In the early 70s, we had the Nifty 50, the 50 stocks that everyone should own forever. Right now, we have the Nifty 1 stock. Everyone, when I get phone calls or media requests, at least half, if not 3/4, are about Apple. Apple is to me, it's a bubble. It's a parabolic move. It could go to 1,000 this year, or it could stop at 600. But when Apple stops, it's going to end as poorly as any other bubble ends.